welcome to another video at thetraderguy.com, and this analysis is going to be for the week coming up for November 14th, and I'm looking at larger time frames here because as I was doing some analysis for some customers, I realized that there are a lot of the same signals being thrown around currently, all pretty much telling me the same thing, and could be interpreted one way or another. And I just thought that this might be an interesting moment to kind of look at some of these things because of the fact that if you aren't real careful, you could miss some potential warning signs. Now, looking at the charts, and I'm going to go through a couple different ones here, but this is euro dollar on the weekly, and you can see that we had a pretty supportive week here, and we did bounce from the 135 level, which of course is good news for the euro bulls. The top of this hammer was retested and bounced back up to form another hammer. Now the thing is this looks very bullish, and one would have to be rather impressed by the tenacity of the euro. And there are some fundamental reasons for this. I'm not a big fundamental trader, but the truth is that the Italians have passed some budget issues. The Greeks have sworn in a new prime minister, so people are starting to feel pretty good about the euro. But the reality is a lot of these gains happened on Friday in very low volume environment in the United States. Also, leaving all of that alone, looking at the charts, I can see that we have an area here at 140. It's a big figure number, and we did pop back over it recently, but you can see that there should be some type of reaction there. And if you play this traditionally at the break of the top of the hammer, there's really not much room to move. So what I see in this is I see the bias is to the upside, but it's got limited potential, at least until it gets clear of all that. So, and even when it does clear 140, I mean, this is a pretty congested area. So I think ultimately am favoring the downside. I just think that this coming week in the euro might be, it might be a little bit of a pop, but it's going to take something pretty special to bust through all of this, I think. And let's be honest, it's only taking one bad headline to send the party straight back down, crashing. So it's very interesting. This might be a non-pair, a non-trade for me this week. Now, looking at the dollar CAD, similar circumstance, and there are a couple different reasons why I think that this, even though it's dictating dollar weakness, as you can see, we've popped up and then we pulled back, and in doing so, we did form a hammer for the week. And looking at that, looks pretty bearish. The trend's down. I mean, there's no doubting that over the last several years. But we have this area right around parity to 99, and I actually think of it as one area. It's one support area. And it looks to me like that's probably where it's going to head to. Now, that's not a very big move, and it's I mean, there's probably pips to be made there, but I wouldn't expect much out of it. Conversely, we have the light sweet crude, CL or WTI, depending on how you're tracking it, is at basically 99 a barrel. Now, it has massive resistance overhead at 100. So we're coming up on that now, and the the Canadian dollar, is so heavily influenced by the price of oil, it kind of lines up almost perfectly that this could drop down a little bit and then maybe bounce a bit, and we don't know. So what do I think? I think that unless we get a break below 99 and a daily close, more than likely what we're going to end up seeing in the dollar CAD, for at least for the near term, is a return to this consolidation. And I actually should clarify here, the consolidation I have basically from 99 to 103, but I understand that these are the extremes. It's almost like it really wants to trade between 1 and 102. And I think that might be the meat of the move. I think we're going to consolidate for a bit here. Not surprising. The pair loves to consolidate. I mean, you can see that there's quite a bit of consolidation even with a breakdown previously. The United States and Canada have such intertwined economies. That's really not that big of a surprise. Looking at the Aussie, again, we have a nice hammer. Looks very supportive. It's right above parity is where we saw it, but we've got the issue of 105, and it's just above this hammer. So this is another situation where it's probably biased to the downside for the dollar, but and then on top of that, you have to look. Even if we do get above that, 107 is a little bit of a double top recently, so you really have to question that too. What do I think? I think we're still in a consolidation area. I think we're still going to be between 1 and maybe 107, but probably 105. Maybe possibly popping up, but I just don't see a massive breakout. And what does this say to me overall? It says to me that we're going to continue to have uncertainty. I know that's a real stretch to kind of guesstimate there, but I find that just everything's lining up. The Kiwi dollar is the same way. It's got a hammer, and I mean it's right at resistance. Probably not the most beautiful hammer, but it says the same thing. And to me, it just looks like it doesn't want to go anywhere. Here's the daily on the dollar Swiss. Looks pretty bullish, right? We popped up, we tested 90. Well, look at the weekly. Look how confusing this is. The weekly has a shooting star. In this particular pair, I realize this isn't the trigger for intervention, but do you want to be buying the franc? I don't. If it does fall, it's got a floor at 85, would be my guess. The actual floor is Euro Swiss 120, but again, this to me looks like it could have a move down. And it's a little wider range than what we've seen in the other ones, but I'm very leery of buying the franc just because of the Swiss National Bank. Now, the one pair that looks like it actually might have a little bit of room to move, and in choppy conditions, we've got two hammers in a row on pound dollar on cable, and there is a consolidative area there, but my suspicion is we may drift higher here over time in the 165. If we break below the bottom of the two hammers, that's an extremely bearish move. So that will be one to watch if you really want to know if the moves that you're watching about are about dollar strength or not. The cable might be the tell. This could rise while the others fall. Not real sure what's going on with the cable. We had an interesting move on Friday in New York trading in the afternoon. Just out of the blue, we got this just ridiculous candle. It was low volume, obviously, and some stops had been run. But having said that, that's not a reason to buy at this point. I mean, we don't know really what's going on with that. But it does look like if we could break over last week's candle, we could go back up into this area. So all in all, what do I see? I see dollar weakness, but I see very limited area to move before we run into resistance in most of these currencies. So to me, I think we're going to have very, very choppy and wild swings again. And it makes sense if you think about it. There's a lot going on over the weekend. We've got to get the situation together with the Italians and the Greeks. And, something that people really aren't talking about yet, but French bonds, the difference between the spread between the French bonds and the German bonds are starting to widen out considerably. If they come after France and France gets into serious trouble, that's it, game's over. That really leaves Germany and Germany only. They still haven't funded the EFSF, so because of all of this, I don't want to short the euro yet, but I do see short risk for that matter, but more specifically the euro. But I do see a potential where we could get a little bit of a pop in a lot of these currencies, and then they just get slammed sometime later this week. Plenty of catalyst out there coming up over the next 5 days or next 5 trading days. So we'll see. We'll see what happens. But this is a good example of a week that looks like it's setting up one way. But when you look at it a little closer, there might be more to it than that. It may be telling you, giving you mixed signals. And mixed signals sometimes are the best signals because they just tell you that it's time to stay away or stay alert and give you a heads up on how things may turn out. Anyways, guys, that is the video. Looking forward to the week of November 14th. I could be wrong. It happens. But that's what I see in the charts. If you guys got any questions, you can email me at chris@thetraderguy.com. And of course, come to thetraderguy.com in the educational section. All of it's free. Plenty of videos, and expanding them as often as I can. It's a pretty comprehensive course so far to learn how to trade, but I've always got things I'm trying to add. Thanks a lot.